Welcome to FinStex from Laura and Anthony.
Well, we are here after a long break. Apologies for this long delay.
Yes, apologies indeed. It's great to be back, though.
It really is. And we are absolutely buzzing, honestly, because the story we're unpacking today is just fascinating. We're seeing this extraordinary climb in gold prices throughout 2025, hitting levels we just haven't seen before.
Absolutely. It's been a remarkable period for the gold market, a really significant surge.
Yeah, and what's striking is how everyday people are responding, right, to these record highs.
That's the really interesting part, yeah.
Exactly. I mean, we're talking gold pushing past $3,300 an ounce. Just think about that for a second.
It's a huge number.
And it's not just a quick spike. We are hearing these widespread reports, people selling their old gold jewelry, even, family heirlooms, pieces with real history, just for cash. Okay, so let's really get into this unprecedented gold rally. What's actually behind it?
Right. Let's look at the numbers because they really paint the picture. By April 2025, gold hit a high of $3,395.84 per ounce. Wow.
Which is what, nearly a 30% increase just since the start of the year?
Just since January. That's incredible.
Yeah. And what's compelling is that this wasn't sudden. This upward trend, it's been building since early 2024. So overall, it's surged over 40%.
Over 40%.
And remember when it crossed the $3,000 mark back in March? That was a big psychological level.
Definitely. It signaled a real shift, didn't it, in how the market sees gold's value.
Yeah, exactly. And this wasn't just, market noise. We saw major financial players adjusting their forecasts.
Ah, right. Like who?
Well, institutions like Goldman Sachs, they revised their projections upwards to $3,100. Bank of America went even higher, raising their target to $3,500.
Okay, so the big institutions are seeing sustained strength. Why, though? What are the drivers?
Well, if you connect it to the sort of broader global picture, there's several things feeding into this. Ongoing global economic uncertainty is a big one. Gold is that classic safe haven, right?
Always is in turbulent times. And I guess the impact of those Trump administration tariffs is still lingering, creating some market instability.
That's definitely a piece of the puzzle to consider, yes.
Yeah.
Adds volatility. Plus, and this is crucial, we've seen central banks buying gold pretty aggressively.
Oh, interesting. Why now?
Well, partly it seems to be about diversifying reserves.
Yeah.
Especially, after the freezing of Russian assets back in 2022, that sent a ripple through central banking circles.
Ah, okay. So a strategic move, diversifying away from maybe assets that could be frozen?
Precisely. It looks like a real strategic rethink on asset allocation for some countries.
Got it. And what about the Fed? I heard something about interest rate signals.
Yeah, exactly. The Federal Reserve signaling potential interest rate cuts also boosts gold's appeal.
How does that work?
Well, lower rates make holding assets that don't pay interest, like gold, more attractive compared to, say, bonds that would yield less. It's about opportunity cost.
Right. The cost of not holding something else goes down.
Exactly. So this whole mix of factors, uncertainty, central banks, Fed signals, has led some analysts to suggest we're in a kind of optimal window for selling gold right now.
An optimal window. And are there projections further out?
There are. Some suggest prices could maybe reach around $3,805 by 2026 and potentially even $5,155 by 2030.
Right.
Though, projections are always tricky.
Of course. But $5,000 gold. Wow. Okay, but back to the resin. What's really striking is this reaction, this rush to sell. You mentioned jewelry centers.
Yeah, reports from places like the St. Vincent Jewelry Center in LA, they paint a really vivid picture. Jewelers there say they're seeing an unprecedented number of customers.
Just swamped.
Totally swamped. And people aren't just bringing in, stuff they don't wear anymore. They're bringing in cherished family heirlooms.
That's the part that gets me. These aren't just recent buys, are they? We're talking older pieces.
Much older. Pieces dating back to the 1800s, apparently. Wedding rings, things with huge personal significance. Yeah, one jeweler, Olivia Kazanjian, she mentioned seeing people actually melting down items engraved with, like, family wedding dates.
Oh, no. That feels significant. Like losing a tangible link to the past.
It really highlights that potential loss of historical context, doesn't it?
Yeah.
And it's not just sort of average people. Reports mention rappers liquidating big gold pieces, people selling off their grandfather's entire collection. It's widespread.
It really forces you to think about that trade-off. The immediate cash versus, well, the history. Like, take a 14-karat gold bracelet, maybe with some nice enamel work. how much would that fetch purely for the gold?
Right. So based on melt value alone, something like that might bring in around, say, $3,200 at these prices.
Which is a decent chunk of change.
It is, but then you have the hidden costs, right? Yeah. The artistic value, the historical significance. Often that's worth far more than just the metal content.
And I suppose that kind of craftsmanship is hard to replicate now.
Very hard. Experts warn about that. Vintage craftsmanship is often irreplaceable with modern methods. Plus, melting and recasting. It can actually introduce weaknesses into the metal.
Ah, so the new piece might not even be as sound structurally.
Potentially, yeah. So it's this real balancing act.
Right.
Instant cash versus losing heritage, artistry, and maybe even quality.
This whole frenzy must be having a huge impact on the jewelry districts themselves, like in LA or New York.
Oh, absolutely. Downtown LA, New York's Diamond District.
Yep.
They're described as incredibly busy, buzzing with activity.
Money flowing everywhere.
Apparently huge sums changing hands daily. Hundreds of thousands in LA, for example.
And businesses must be adapting, refiners and such.
Definitely. Major refiners like Elemental are reportedly specializing more in melting down this scrap jewelry. Business is booming for them.
But there's a downside too, I imagine. All that cash and valuable metal moving around.
Unfortunately, yes. There's been a reported rise in crime, like that big $10 million heist at Love Jewels. Security is being ramped up.
Right. So while one analyst noted people probably aren't getting rich selling off bits and pieces.
No, probably not individually rich.
The selling just continues like crazy.
It does. It really shows the draw of high gold prices. It reminds me of those slightly morbid stories from past gold spikes.
What story?
About people supposedly asking morticians for gold teeth.
Seriously? Wow. Okay, that really underscores the intensity, doesn't it?
It certainly does.
So, just to pull this together, we have these record gold prices in 2025 driven by a whole cocktail of global factors.
Right. Uncertainty, central banks, interest rate expectations.
And that's triggering this massive wave of people selling old gold, even precious heirlooms. It's about getting cash now, but maybe at the cost of history and sentiment.
Which leads us to a final thought, perhaps, for you listening. What does this widespread selling of personal histories, these tangible links to the past, in exchange for immediate cash? What does it really tell us about the current economic climate and maybe our relationship with heritage itself?
Something to think about. Don't forget to like, share, and subscribe.